I just came off an awesome interview with Dan Liana from Recovco Direct, and we were talking a lot about the lending market. He's a lender, and he's been doing really well. But obviously, there's certain things that are changing. What are you seeing as the pulse of the new lending that's been backed by the government?
Yeah, it's a really really interesting time. If you look at what's happened in the last several years in the real estate investing space and residential real estate in particular, it's amazing how much new attention the mortgage industry has given to the space. But it's been banks, it's been mortgage companies. It has not been backed by Fannie Mae, Freddie Mac, or the FHA. And for people who don't know why that's a big deal, I mean, you and I know that the virtually every home purchased in America by somebody who's going to live there is, of course, they could get it from Bank of America, or they can get it from Fred's mortgage shop on Main Street, and it's going to wind up being bought by Fannie Mae, Freddie Mac, or the FHA. So those government entities created the basis by which the housing market financing actually exists, right?
Yep.
But they've been so unfriendly to investors all these years. And part of the reason they've been unfriendly is their attitude was, hey, we're about encouraging home ownership. We're about making home ownership affordable. They want to impact affordable housing. So like their heart's in the right place and their mind's in the right place, except for the fact that affordable housing doesn't just apply to people who are buying homes. Affordable housing can apply to people who are renting homes. And if you give affordable mortgages to the owners of those homes, i.e. the investor, that's going to trickle down. That's going to give the people less likely to see their mortgage or their rent go up because the mortgage payment is low, the landlord's happy with the amount of money he or she is making, and so forth. So now that's happening. And Freddie Mac especially has really pioneered this concept of making their loan programs more investor friendly. And that means basically one thing. Instead of a 7% mortgage rate or a 6% mortgage rate, you're looking at a 5.25% to 5.5% mortgage rate. That's not here yet, but it's coming.
So let's then talk about interest rates, because I'm very interested to see kind of what's been going on there. Everybody's been saying interest rates are rising. Obviously, they're rising. How much of that impacts the housing industry? How much of that impacts investing, would you say?
Well, it's one of the coolest things about single family real estate is the fact that every house can have one of two personalities. It can either be an owner occupied property owned by a homeowner, or it can be an investment property. And so as a result of that, whichever way the economy goes, there's an upside for the investor market. So a great example is rising rates, right? You're seeing that happening. It blows my mind how much hair is on fire out there about negativity in the overall housing market when there isn't any negativity. Okay, there's nothing going wrong right now in the U.S. housing market that would be reason to have any of the kind of headlines we talk about here when we do our fun segment on smart people saying dumb things about real estate. It's always somebody whose hair is on fire because affordability is low, which means the housing market is going to crash. Well, affordability is low because the market is hot, and the market is good, and we've talked about that before. We'll talk about it again. Same thing with rising rates. They look around and they say, what in this giant hayfield of positive information about the housing market and the economy, let me go try to find a needle of negativity. And the needle of negativity is, well, rates are going to go up, right? And so rates going up necessarily means that people are going to shy away from the market, and it's going to make it harder to buy. It's going to make it more expensive to buy, which is going to make affordability worse, which of course is the new Satan when it comes to the housing market.
Right.
Right. The flip side of that is that, you know what happens when mortgage rates rise? Home ownership rates tend to not benefit from that. Okay, so a young couple who wants to buy a house may wind up saying, well, let's wait a year because the rates went up. That payment's a little steeper than I wanted to go. Let's get another year of savings behind us, make a bigger down payment, whatever. It causes a little bit of an uptick in cost, so a little bit of a downtick in affordability, and more people rent. So if you're an investor, what it means is if you're buying, you're paying a higher mortgage rate. But the likelihood is demand for rentals is also seeing upward pressure because the home ownership side of the equation gets a dampening effect. Does that make sense?
So as an investor, I should not be freaking out from what I'm understanding.
as an investor, freaking out that's a cardinal rule of what not to do. The beauty of this asset class is that it's slow.
Yep.
It's a lumbering giant, right? People don't wake up in a cold sweat at 2 a.m. having read some article on Yahoo Finance. I say that with all the sarcasm that you hear from me. Yahoo Finance says that the market's going to crash, and people don't wake up at 2 a.m. and sell all their real estate, right? The imperfection in the process slows things down. I am a very, very big believer that no matter what age you are, if you've got a decade or two, or better yet, 3 or 4 decades in front of you, that you're going to build a real estate business, you're going to build a real estate portfolio. There are going to be times that rates are higher and lower. There are going to be times that there's a stronger economy, a weaker economy, a boom, a recession, wartime, peacetime, Democrats, Republicans, dogs and cats. It's all going to happen during your real estate investment timeline, right? Because your timeline is half of your lifetime. And so none of that stuff scares me, right? None of it does. It's like, here's a great analogy that I heard years ago that I loved. You could have a hurricane going on in the, wherever the hurricanes go on, in the I was going to say the ocean, but I was looking for something else. The Gulf of Mexico.
Florida.
Whatever, right?
Florida.
Pick a body of water off the coast of Florida. There's a hurricane coming through, and it's the worst thing ever, right? It's the absolute worst thing ever, except that it has no effect on the Gulf Stream. None whatsoever. If you're 100 feet deep in the Gulf Stream, you're chugging along in whatever direction that Gulf Stream is going, and whatever's happening up on the surface, you don't even feel it 100 feet down. That's the way that I think investors ought to be thinking about their investment strategies, that none of this stuff, the hair on fire media that would have you believe that anything that happens somehow is bad for the housing market and predictive of a crash coming, like they're like rubbing their hands together with glee that somehow we're all going to get hurt and they're going to have somebody to blame for it. The truth is that's splashing on the surface, and it could even be a recession, could even be a hurricane on the surface. Doesn't change anything, right? You're accumulating housing in America. So long as it's the best place to live, so long as it's the place that attracts people from all over the world and nobody leaves, even people who swear they're going to leave if their candidate doesn't win, they don't leave, right? Nobody leaves.
Nobody leaves. All that hoopla, that drove me crazy, right? Like Canada saw an increased number of citizenship applications. Give me a break, right? Like
Rosie O'Donnell's not going anywhere. And listen, I'm not being political. I know that when Barack Obama won, there was a whole bunch of morons screaming how they're leaving, right? And guess what? They didn't go anywhere because they were throwing a tantrum. Same thing happens. It doesn't matter. Half the country is freaking out. The other half of the country is rubbing it in, and then it goes the other way, and it goes the other way. But the beauty of investing in the housing market is that is, as crazy as the world is, the more attractive investing in real estate is, because it's the most tangible. It's yours. It creates control for you. You own real estate people are living in, and there isn't anything else. There's no stampede like happens on Wall Street where they all freak out. Oh my God, what was it last week? Stock price, the stock market goes down 200 points because we threatened a tariff on somebody. And 2 days later, we back off the threat and the stock market comes back. It's like, if anything, and I love the stock market, if anything, they prove on a weekly basis that they freak out. They freak out. Real estate doesn't freak out. You take your time, you build a fortune.
I think one of the biggest things that I constantly hear people saying is, I want to flip, I want to flip, I want to flip. Why do that? That's such a short-term mindset. What you're saying, Greg, and what I also believe to be 110% true is, I'm not saying don't stop flipping. What I am saying is buy and hold for the long term. And that's it.
Yeah.
Here's
the thing about flippers. Flippers, you can do great, okay? But you're going to regret virtually everything you ever sold. Okay? And so hang on to as much as you can.